So I have a credit card, but it has an incredibly high interest rate, Mike. What should I do? Great question. We're going to talk about that in today's training. Hey everyone, it's Mike Adams, and on this channel we empower individuals to achieve freedom through improved financial literacy and business ownership. If you're new to the channel, make sure to click the bell, click subscribe, click the bell, so that way you get notified on any and all of our future trainings and our future content. So in today's training, guys, and this one is really a response to an inquiry that I received here on the channel. Again, guys, I love your feedback, love your comments, and I do my best to get to those comments as fast as possible, and answer those questions for you guys. And as well, where I can, create a video just like this to answer your particular questions. So this question here was about, I have a credit card and I'd like to use it to do velocity banking, but this credit card has an incredibly high interest rate. Should I still use it? What should I do? So in this video, guys, I just wanted to give you guys a couple of tips and things that you can do if you have a credit card that has really high interest, and how you can make sure, okay, if it's right to use that line of credit for velocity banking or not. Because again, guys, I've talked to a lot of people about this strategy. We've got several clients that have been utilizing these kind of strategies for years now. And so I've talked to people with all kinds of different lines of credit. And I've spoken to people with insanely high interest rate lines of credit, 29.99% interest, and on different types of lines of credit, even higher when everything's factored, when fees are factored, things like that. So bottom line is this, you have to do the math, okay? And in one of our flagship webinars on this channel where we talk about the velocity banking strategy, we use an example where we're using a credit card with a 21% interest rate. And we use that one on purpose because it is generally, that's a pretty high interest rate. When you're getting above that number, even that's high enough, right? When you're getting above and beyond that, you're talking 29.99% interest. Does it still make sense to use that kind of a line of credit to do velocity banking? And so, great question. And so, first things first, okay? First things first, okay? If you are sitting with a credit card, okay, and you have a good repayment history with that particular credit card, and you have high interest on that line, the first thing you need to do is pick up that phone and call your credit card company and negotiate with them for lower interest. And I know I just used a big word, negotiate. It's like, no, Mike, I don't want to call the bank and negotiate. They're so tough, over the phone. And, I don't want to have to negotiate with the bank. It sounds so scary, Mike. Okay, and we're gonna take it down a peg, okay? Because here's the deal, guys. Credit card companies are typically very, very willing to work with folks, especially their long-term customers that have been very, very good, meaning you've been making your payments on time. So if you're someone who has not been making their payments on time, okay, or you got 30 days late here, 60 days late here over the last couple of years, and things are really, really rough, you're not in as good of a negotiating position. So yes, that could reduce the likelihood that the bank may want to work with you. It could. Some banks, some credit card companies, do have different types of programs that offer leniency in certain situations. But again, if you've been really, really good and pristine, have a great track record over the years with that line of credit, you got good history there. Okay, if they're charging you 29.99%, first thing is call them and say, hey, look, I love this line of credit. I would love to continue to use this line of credit, but this interest rate is insane. The old saying, it's not what you say, it's how you say it. I ran call centers for a long time out there in corporate America. And believe me, when you're taking calls all day long and you get someone on the line that actually has a little personality or says something even a little bit funny and isn't just calling you angry or to complain, it definitely encourages that person on the line. It puts a little life into them to want to help you out. But regardless, hey, I love your guys' line of credit. I would like to use it, but this interest rate is way too high. Is there anything that we can do here on the line today to reduce the interest rate on this card so that way I can be more encouraged to use it more often? Is there anything that we can do? okay? And all you're doing is asking, okay? It's a simple ask. And you got to think the worst case scenario, okay? If you called up the evil bank, or you flipped over the 800 number on your credit card there and you called the evil bank, okay, that extended you this line of credit, and you asked them, can we just simply reduce the interest that I'm paying? The worst they can say to you is no. Right? That's the worst they can do. Best case scenario is they say, yes, you've had a stellar payment history with us. Let's go ahead and knock you down here. You were at 29.99. For some reason, we had you there. But we're going to knock you down, to let's say 19.99. Or if you were at 19.99, maybe they're able to knock you down to 12.99. And you're able to get that immediate savings there in the interest rate. And then with that reduced rate, the numbers can then make more sense to use that line of credit for velocity banking. Because again, the big thing there is if we're using a line of credit that has interest, we want to pay as little interest as humanly possible. It still may make sense to do the chunk and bring a big chunk over to that line, since we're going to use the velocity banking strategy to knock down that line of credit as fast as possible. So it still may make sense, but we want to have that finance charge here on any lines of credit that we're using to do the strategy to be as close to zero as humanly possible. Okay, so number one is if you have high interest on that credit card, negotiate with that card, see if they will go ahead and just reduce the interest. And again, if you have a really good relationship with that particular line of credit, option number two will be to go kind of all in and ask them if they will give you 0% interest, okay, for a limited time. Ask them for a promo interest rate, okay? And you could let them know, say, hey, look, I'm looking to make a couple of large purchases here, and I would love to use this line of credit. However, the interest rate on this is way too high. I'll tell you what, do you have any promotions available, or would you be able to give me, 0% interest for the next, 24 months if I was to put a, X, let's say a $12,000 charge on this line of credit? Could you give me 0% for 24 months? Okay. And simply just ask the question. Okay. And again, the worst they can say is no, we can't do anything for you. Best case scenario is they say yes, okay, and not only did you, we went beyond just a reduced interest rate, we got you 0% interest for X amount of time, upwards of 24 months potentially on that line of credit that you can then easily use and easily justify using that line of credit to now grab a chunk and do velocity banking. But let's say, worst comes to worst, you call your line of credit and they say, no, we won't reduce the interest. No, we're not going to give you 0% interest for any amount of time. We just don't do that. Or it's just, this is just our bank's policy. Sometimes, with lines of credit, okay, depending on when you got that line of credit, that particular line, okay, might have different terms. Okay, an example would be like with Citi. Okay, with Citibank, there's, the Citi Simplicity, there's Citi Thank You Rewards, there's Citi, there's all these different variations of the Citi card that you can get. Each of them has their own different sets of terms, conditions, rules. Some of them may not allow for an interest rate change. Okay, so either way, so there might be all kinds of scenarios and reasons why they won't work with you on that. And if that's the case, okay, your final option final option is to really just run the numbers and see if it still makes sense to use that line of credit, even with the high interest here, to pull over the chunk to do velocity banking. Earlier in the mortgage, it may still make sense because you're going to get that big time savings on the front end on the mortgage. But as you get later in the mortgage, with a higher interest on that line, it makes a little less sense later in the mortgage. Okay. But for me personally, guys, again, if you got a good standing with this line of credit, and again, they just don't want to work with you, they don't want to give you lower interest, they don't want to give you a promo, they just don't want to do anything for you, and you got decent credit, my next, the final option would be to go out there and get a new line of credit. Okay, go out there and find a new line of credit that has more favorable terms for you and for you to be able to utilize this strategy. And on this channel, we've talked about different lines of credit that I prefer and that I've used inside of my personal finance, inside of our business. I'll put a link below to that particular video. But again, if the bank isn't going to show you any loyalty, you have no reason to show that bank any loyalty. And if they're not going to work with you and you've been in good standing with them, hey, look, if they're not going to work with you, there are plenty of other banks that just might. And so depending on your credit profile, again, if you're in really good standing, you could go out there and get a different line of credit that you could then use for velocity banking. So those would be my tips and some of my advice on what to do if you do have a line of credit that does have high interest. Again, always start with picking up that phone to negotiate with them, see if you can get them to just lower the rate, see if you can get them to give you a 0% for an X amount of time, or if anything, still run the numbers to see if it makes sense. Okay, earlier in the mortgage, it may still make sense to use a high interest line to pull over a big chunk. Early in the mortgage, it may make more sense than later. Okay, but again, and probably my option that I'd point at is, again, if the bank is just not willing to work with you and you have good credit standing, you're in a good credit position, go out there and apply for a better line of credit that will give you that 0% promotional rate, or a much better rate than what you're currently getting with that high interest line of credit. So if you found value in this training, guys, make sure to give it a like, give it a comment below. I will see you guys in the next training.